very good morning. I think you all know, this 1 month it's about slightly more than last 30 days, things has getting a little bit, whether it get more exciting, but also becomes more uncertain. Of course, the immediate one, as far as Malaysian market is concerned, is what will happen after the GE15. Because before that, I say slightly more than 30 days ago, which is on the 7th of October, everybody get excited on the budget, and then immediately after that, the budget is destroyed. Although at the very beginning, we already argued that there's no reason for government not to dissolve because they have announced the budget. So this is where things get a bit more uncertain. But having said that, life still going on. We have to try to understand what is happening so that we know how to position ourselves. Because the standard disclaimer, right? And just say that at the end of the day, you don't have to believe in what I say now. Okay, we all know, in any investment, whether it's equity investment, fixed income, properties, you can't run away from being affected by economy, right? Economy will somehow still so-called affect the asset returns, so to speak. So we'll look at what's happening now on the economy because there are so many things that are happening, and yet there are still so many things that are so uncertain. Okay? So now, the first thing, is that, right? Beginning of the year, nobody has ever imagined that Russia really invaded Ukraine. Right? There has been talk. There has been so-called signals saying that they may invade, but even America, Europe just think that they won't actually invade. But the fact is, it has invaded Ukraine, and the war is still continuing, and you still don't know what is the end game for that. But if you look back on the Russia situation, it's very clear that actually the sanction is irrelevant to Russia. This is the most important part, because you can notice that if you look at the trade as a percent of Russian GDP, it has been coming down all the way. Right? Here, of course, because of the energy prices and all this, is a little bit hovering, at around, on average, it's around 50% of the GDP. So put it another way, it doesn't matter. You sanction, it's all right. Trade is not a big issue to Russia, right? And because in the past they have accumulated part of their fiscal budget, right? They have a good fiscal balance, and they still can continue to spend money for war. That is for sure, right? And if you look at the foreign reserve, it's still hovering at a relatively high level, right? So what does that mean? That means that they still can continue to go for war. Then the question is, can Ukraine and the West able to continue fighting against Russia? And what will happen? Right? This is something that we don't know. My personal view is that the war will continue, although there are a lot saying that this winter is crucial, right? Whether Russia will make it or break it. But I think that the war will still continue until at least middle or even the whole 2023. So this is not going to be that good for the energy sector. It's, not that good. The producer will be laughing all the way to the bank. When it's not that good, that means to the economy, you can't really see that so-called the price fall back to the normal level. Or, in fact, we may be going into the new norm. Can you just go to the next slide? Okay. Now, again, China, if you look at the situation, it's the same thing, right? You can see that first, a lot of people think trade is very important to China. But if you look into as a percent of GDP, right, it's also like Russia. They have been intentionally reducing. Of course, part of it you can say is during the Donald Trump time where there is a sanction and there's trade friction between China and US. But you can see that they also intentionally reduced now. And the fiscal balance has remained strong. This part is because of COVID and the foreign reserve. Of course, off late it come up a little bit because of the weak, or rather to say because of the uncertainty of the security policy. But one thing is that, having said that, China may be prepared for war, but I don't think, and I hope I'm right on that, I don't think they will invade Taiwan so soon. I don't know whether to use the invade or unify. Unification from a China point of view is unification, right? I mean, essentially, you know that they have been, after Nancy Pelosi visited Taiwan, there's a huge tension. But frankly speaking, I don't think China will do anything until 2024. Why 2024? 2024 is the Taiwan presidential election. So if you can influence Taiwan voters, right, to choose a pro-China president, you don't have to fight, right? You don't have to fight. You have seen that in Hong Kong, right? So, no point. I mean, the ultimate Sun Tzu art of war is to win the war without fighting, right? So, until 2024, I don't think anything you need to worry, you know, that will cause the China economy, because of the war to collapse or whatever. Now, what is happening now? Yesterday, again, news saying that China is relaxing the COVID policy and all this. Actually, if you read it carefully, it still remains the same. This one was published on the 5th, announced on the 5th of November. Of course, it's in Mandarin, and it's not that clear because when you shrink it. But the gist of it is still, right, saying that they are going to maintain, the keyword here is dynamic zero COVID strategy. It's dynamic. Okay? And yesterday announcement is still repeating the same thing. The only difference is that, until now, some of the so-called China officers in the province area or even in a certain district and all this, they overdone because all of them are worried that if that area, COVID out of control, they may lose their job. Right? Like you have seen in Wuhan, especially, although Shanghai is different, right? Li Qiang actually is going to become the premier despite a very strict COVID policy in Shanghai. But anyway, it's still a dynamic COVID, zero COVID strategy. And what you can see is that, in the past, I say some are crazy. Those people are just worried too much. So they have been, carrying out certain areas, certain places, certain provinces, and all this. They're carrying out, 2 days PCR, 2 PCR tests per day or even 3. And of course, part of it because the PCR test is a money churning business in China as well. So now what they announced is that they are not going to charge you PCR, but you are not allowed to do, of course, scientifically also it does not make sense. Doing 2 PCR tests a day. So what? So all this will be prohibited, so to speak. Right? So, if you say it's a relaxation, it's a relaxation. But it doesn't mean that it's like life back to normal like Malaysia. Actually, I also don't wear face shield when I'm doing presentation now, right? Some of us don't wear masks and all this. It's not that level, right? You still need to be quarantined, right? If you can't go into China, right? And they have been already open. Is that instead of 7+3, that means 7 days in the forced quarantine area, 3 days in your residence, now becomes 5+3. It's still there. It's not really relaxation, right? It's because before that there's some confusion that the airline and the rail transport, right, abolished that you must provide your 48 hours PCR test. But then the guy travel, let's say from city A to city B. When he arrives city B, that city asking him to show the proof. So it becomes a real confusion and they are just trying to streamline all this. But it's not really a relaxation yet. Right? Any relaxation, I would say, after first quarter of next year. Because they need to see, right, we are entering into winter, whether the new variants is going to become weaker and weaker, just like a flu or influenza, right? And that is definitely after the Chinese New Year, which is January next year. And China will celebrate for about a month. So it will be after that. Before that, put it another way, to expect the so-called China reopening back to normal and some businesses will benefit. I mean, let's say we put it this way, like Malaysia, whether Genting can benefit or not, I think not so soon. Right? I think they are going to miss the Chinese New Year China tourist group. So after first quarter, then we can see a clearer picture. Then we'll see that whether China will ultimately abolish this zero COVID policy. Before that, no. I mean, of course, market, when heard of zero COVID, I think last night some of the China stocks in the US has run up a bit, getting happy, but I can tell you, this is still not a real opening up yet. Okay. Now, so what is happening in China now? The key part is that it has been silenced for a while because people have been focusing on Xi Jinping, but yet people also have forgotten that there are certain key policies that he probably want to implement. Of course, we know the common prosperity, and then another one is the DCS, the dual circulation strategy, right, which has been advocated and been quiet down for quite some time. What it means is that the internal circulation, that means China want to become more and more self-sustained in their own domestic economy. So this may provide some opportunity to some companies, but again, that is a double-edged sword because especially like one of it, the dual circulation, definitely they want to manufacture chips by themselves. So equipment supplier may have opportunity, but on the other hand, you may be penalized by US under the Semiconductor Act. So these are the things that we have yet to see, right? And for the dual circulation, that's why now you see that more than 1/3 of the SOE, state-owned enterprise, has already changed their so-called company M&A, Company Act and Company Articles, Memorandum and Articles, right, to pledge their support to Xi Jinping. So, which means that SOE will become a major key player in the China domestic economy. And some of you may have already known that the vice governor of the central bank was arrested. And he was in charge of, before he was arrested, he was in charge of the e-commerce e-wallet. So what it means is that because I think Xi Jinping or China want to make digital RMB a norm. So e-wallet is the one that actually, so-called doesn't fall into that game plan. Right? I mean, if you have e-wallet, why should I register myself and to use digital RMB, which is registered directly to the central bank? And then the government will know exactly how much money I have. So that is the part that you have still some uncertainties in China. I say you have to wait until first quarter of next year, after first quarter of next year, probably you see a clearer picture of it, whether, it's progressively moving into a better direction or not, right? Another one is the external circulation. And this external circulation essentially is only importing things that China at this moment cannot produce, right? If not all companies will benefit, right? Not all companies will benefit. And in fact, our Musang King is already planted in Hainan Island and all this. So, and actually, chilies, you know that Sichuan area and all this, they also eat very hot and spicy food one. China is already doing a lot of genetic research and all this to plant chili in China. That's why they are relying less import from India as well. So which may be good news. For us, chili may become cheaper. For a while, chili has been very expensive. But this aside. So external circulation is also more towards of China only importing things that they can't manufacture, they can't produce themselves now. And at the same time, state-owned, but we have to beware a little bit of state-owned enterprise because they are the one that they don't bother about cost. So they may export goods, cheaply to the rest of the world, which may ease off some of the inflation, but on the other hand, it's no good for other countries' local industry, right? So if you look at China's statistic, it's very clear. The economy is not that strong at this moment, right? The dip of the COVID, the rebound, then people think that, it will be around here, but you look at the trend, if you look at retail sales, it's still all the way, it's still on the downtrend, right? Industrial production somehow stabilized, but it's not going up to the higher level. That's why it's a little bit challenging for the China economy now. And what do they do? Export. That's why you see export prices has moved up, right? Despite the import prices coming down. So actually they are making some good margin there. China company are making some good margin. So you may want to look at some of the China exporters as well. Some of them may be making some money out there. Right? So this is China economy, right? This is China economy. So that's why you can see the producer price coming off, but export price still hovering at
I have a question. Do you think if the Republicans can control the House of Representatives in the U.S., the relationships between the U.S. and China will improve?
No, I don't think at this moment. I don't think so, because the China relationship at this moment is across both parties. So I don't think until when US economy is bad, they need to export to China or they need to import cheap goods from China, then they will relax it. That's why if you notice, Biden, I think somewhere in the middle of this year, when inflation pressure rising up, he relaxed some of the so-called trade acts to allow import of China goods. So at the end of the day, the next one, you have to wait until your 2024 presidential election. Right? Until now, of course, economy is a key factor that they may relax a little bit, but to say that they go back to the honeymoon period and all this, not that lucky.
So it doesn't make any difference which parties
it doesn't matter. Both are still inward looking at this moment. Right? Okay. So this is China. And then US, of course, the third quarter GDP rebounded. Although, US definition of the recession is very different from the normal economic definition where 2 consecutive negative growth is recession. Right? They look at including the labor condition and others. So officially, US has not announced that they are in the recession yet. But I think by first quarter of next year, it's very likely that they will go into recession. It's very likely. Because again, I don't know what Fed is thinking, frankly speaking. Theoretically, let's say at this moment, right, US inflation is still 7.7%. So if you assume that it comes down, how fast it can come down, right? When Fed is talking about that terminal rate at around, now the market expectation is 4.84%, the terminal rate for the interest rate before it come off. Now, if 4.84, which means theoretically your inflation also has to come to around that level. But can that happen so fast and so soon? Something that we don't know, right? So that's why it's very likely that US will enter into recession in the first quarter. But I would say that it's probably a mild recession, and probably it may be short. It may be short. The reason, if you look into that, this one I think I can skip. The reason is that it's very clear that a lot of countries are a little bit inwards looking. Of course, we have the factors of Ukraine, Russian-Ukraine war and all this, but you look at the global trade actually is starting to getting a little bit, moderated, right? I use the word globalization because which means that after COVID, rebuild of supply chain, repositioning of supply chain won't happen so fast, right? It takes time. That's why, you don't expect the trade to come off so fast, but there will be a lot of the so-called repositioning of the global supply chain, right? So definitely some will shift out to China, and you know very well that like Apple, right? Although the Zhengzhou problem is still causing Apple a headache on the iPhone 14, but in the past, it has always been that Foxconn will produce the latest iPhone in China, then only after at least 6 months or later, then they'll see where they can produce it elsewhere. Now, this iPhone 14 actually is parallelly producing in China and India. Of course, India capacity is still much lower, right? So that's why, Zhengzhou issue still causing Apple and headache. But you can see that so-called, whether you call it deglobalization or I use the word globalization, right? It's happening. It's definitely happening. And who will benefit? It depends, right? It depends because at the end of the day, China also will partially benefit because I say they're trying to build everything by themselves, right? Because they have the population, right? If they can build it themselves, economies of scale is there. So it's all right for them, right? Another one is, of course, US will partially benefit because some of the manufacturers have no choice but to go nearer to US. Not necessarily must be in US. It can be in Mexico. But it's nearer to the US side, right? And of course, ASEAN is ASEAN by itself. So it depends on how we position ourselves. Now, the most critical part now, of course, because of the Ukraine-Russia war, the world has wake up, right, to its nightmare that energy, right, cannot be separated from politics. Because this is the first time, after Second World War, that energy or natural resources, it's not limited energy actually, agricultural crops also included, right, can be used as a weapon. Of course, we can argue that during the 1970s, the oil crisis, Middle East used oil partially as a weapon, but since then, right, even during the Cold War, you don't really see these kind of things happen. But today, right, with the Russian invasion into Ukraine, then the world wake up that energy is an issue and it can be used as a weapon. So this part is exactly that you look into it, right? So US, right? US, because they have their own oil, right? They still have their own oil, they still have the shale oil. So you can see that the oil prices is getting a little bit more stable compared to the OPEC side, where the production, despite the increased production, but if you look at the OPEC oil price, actually it's higher, right? There is a premium there. There's a premium there. I can show you this one, right? In the past, you can see that the crude oil prices between WTI and OPEC basket, it has been actually very good. I mean, just marginal differences because of the shipping cost and partially of the oil quality. But now you can see that the spread actually is now, of course, they come off, but still maintain at about $5 per barrel premium, right? Compared in the past, it's relatively low. So this is where oil prices were still being elevated. But from the inflation point of view, when the oil price go up from 70 to 90, it's a huge inflationary pressure. When it stay at 90, year to year is almost zero already. So that is the percentage change magic, so to speak, right? So in terms of inflation, you say it has eased off, but it doesn't mean that it becomes cheaper. It doesn't mean that it becomes richer. So that's what it is. And then in terms of for the oil, in US, you can see that actually US gas price has come down. That's the reason I think why Republican doesn't perform as strong as some survey indicated, because oil price has come off. And in fact, despite whatever you say, right, the average supply of the gasoline, the petrol, actually is around at the historical average level, right, this year. So it's around that. It's not come to a shortage during the, this type of situation, or during the, this year actually, it's go by month. So when you look at the 2022, it just follows the month. So it's not like during the summer situation, where you have some shortage. That's why the oil price, the petrol price spike up right in the middle of this year. Now it has come off. So we will expect that this one probably will start to be more normalized until next summer, if the Ukraine-Russia situation continue, and OPEC for whatever reason, but their supply cannot increase or even drop off. I mean, it can be terrorist issue, it can be weather issue, you just don't know. So if you ask me, next year, I'm looking, okay, the range is pretty wide, but I'm looking at the oil price of between $75 to $90, right? Where I think most of the time it will be hovering at around $80. It probably will hovering at around $80.
Going back to another thing, Phua.
Yes.
If the Republicans do manage to take the House, do you see that they're going to start opening up oil drilling again in the U.S. and pipelines?
I think so. I mean, they are definitely more friendly to the so-called old energy sector. So definitely it will.
So that means investments in pipelines should be okay then?
Yeah. In fact, I think you see that the share price has moved up a little bit in the US. So that is what it is. It will. Yes. And then, of course, like in terms of oil, right, I think price may stabilize. What about natural gas? Natural gas is challenging. Unless Europe really wake up, which they have not yet, to accept the fact that even the transition to the carbon zero, now COP27 is still ongoing. The transition to zero carbon will take up to 2050. If not, right, next year you will see a divergence between between the crude oil prices and natural gas. Right? Of course, you can see that during the Russian invasion, right, it spiked up, now it come off a little bit, but it's still at a high, compared to the historical. And everybody gets some relief on that. But I would say that next year is going to be challenging. Why next year is challenging is because you look at currently, this winter for Europe is not really that big headache yet. Because if you look at the inventory, right, as a total of the full inventory, they have built up, right? They have built up, right? And you look at it compared to the full storage, it's close to 100. So they can overcome this whole winter. Now, the problem is after this winter, right? If you look at the historical trend, right? Normally after winter, it will come down to about 70 to 80%. That was with Russia's supply. So without Russia's supply, what will happen? It's going to be challenging. But exactly as we asked, if Republican at least can influence the policy, because sometimes the Senate can just reject it also. But let's say if they can influence the policy, can shift to a little bit more old energy friendly, US will continue to expand and export the natural gas to Europe. That will be a better solution, right? So, like I said, all really depends on what will happen to Russia-Ukraine war. And there's no ending. This is a real side note because I really tired of talking on all this Russia-Ukraine issue. But if some of you are aware, end of last month, essentially, Putin was being so-called, quote-unquote, confirmed by the Orthodox Church as the so-called chief exorcist. You can just search internet.
Chief what?
Exorcist. Because by defining that Ukraine is Satan. So there's no ending to that yet. That's why I'm very tired of talking about this, because you don't know what is happening. You don't know what is happening. But I think the war will continue. So long as not a good way to say it. It doesn't, live people are dying there. That's why it's not a good way of saying things. But so long as it doesn't create chaotic situation, inflation and all this, it will be continuing like that, right? And life just go on. So, I say, until the war can have an amicable solution, next year is going to be very challenging for Europe, next winter, not this winter. So in between, if Republican able to bring the US policy into a more old energy friendly, because for the gas company, this natural gas producer and supplier, the logistics side, all this, they have to be certain that, at least the policy will stay for 5 years, because that is the gestation period for them to recoup back their capex, right? So we just wait and see. But I'm more inclined that I will share with you later. That's why we are also positive on Malaysia oil and gas sector as well. Okay, so of course, in terms of food prices wise, you can see that because natural fertilizer, to a certain extent, the prices is actually quite linked to the natural gas. And you can see that it has come off, but like I say, it still stays at a high level. So fertilizer cost is still high. But you look at this relative change, it tells you that plantation company will see a better earnings improvement. It won't go to this level, but from here to here, right? Fertilizer cost definitely is cheaper. So whether this become a new norm or not, I don't know. We have to be careful because first is that the food prices still stay high and La Nina is still there. So you can see that the cycle, especially right when the La Nina cycle is below below -1 and weaker and lower, the so-called food prices, this one is the food prices index as well, right? The food prices will go up because it affects the crop production, right? You can see that it's very clear. Every time it falls, here it will go up, right? It falls, and this one, of course, two factors are. One is the weather factor, another one is Russia-Ukraine factor. You can run away from that. And now it starts to crossing below -1 already. So we just don't know. You know that US Mississippi River just dry up. The longest river in US can get dry up. You know how abnormal the weather is. Tomato prices go crazy. So this one, nothing we can do. It's weather, right? So next year, we can only monitor it. I can say for sure, it will ease off or you have to find some alternative or whatever. And neither, for environmentalists, I think they don't know what to do, right? When you know that, you're supposed to be vegan so that you reduce the methane gas, so-called works by the cows. Now you don't even have veggie, what are you going to do? Right? So these are the things. Now, like I say, the interesting part is that if let's say there is some crops supply shortage, which country can withstand it? Actually, it's China. If you look into that, you look at corn. China accounts for 68.5% of the world inventory. They've stocked up enough. Right? So even let's say our palm oil shortage and all this is not an issue. In fact, corn 68.5%, wheat 53.8%. It has been increasing this as of October of this year. And similarly, of course, rice is Asian staples, so no surprise on that. Even soybean, right, is stocking up, but it's slightly lower because the production is not that strong. But at the end of the day, if there is some abnormal weather that affect the crop production, right, the economy that can withstand this shock, it should be China. Putting aside US, but then US with the abnormal weather, it can be very different because the inventory in US is not that high. Okay. So, because of the Ukraine-Russian war, the threat, so things come back a bit more normal. The premium on the, agricultural product has come off, but still stay quite high, right? And then for the minerals, it had come off a little bit, except for certain because of the China economy is not strong. So that's why the demand for the minerals, last night, I don't know why copper prices go up. I think it's because of expectation of China reopening of the economy. The relaxing of the zero of the COVID policy, which I think is very speculative. And then energy also, come off from when the first Russia invaded Ukraine, but then it still stay at a high level. Now, in terms of the shipping and all this, you look at the dry bulk index, right? It has a bit more normalized, right? A little bit more back to a normal level compared to the initial opening, then plus the Ukraine-Russia war, right? It's come back to a more acceptable level, which tells you that actually, more or less, economy is not that super strong. global economy is not that super strong, right? You have ships moving around. I mean, this is a dry Baltics. I mean, carrying soybeans and all this, and also like coal and all this. But then again, it's not as strong as what it is now. Then,
sorry, Phua, what about the air freight business? How is that doing?
air freight normally is very strong during the component shortage because they have to fly. After that, it has come off. Actually, you look at air freight. I mean, I didn't bring in the air freight figures, but if you look at the container shipment, right? The container price, right? For the 40 feet container, right? It has come off. It has come off. This is the word. I mean, I do have the numbers, but I didn't show up in this slide. I don't have the file here. Actually, interestingly, the freight cost from China to US come off, but US to China is still stay a bit high. So that's the interesting part, right? I think it's like before, let's say, any further worsening of the US-China trade relationship, people are trying to ship something as much. China is trying to import as much as they can at this moment. So if you look at it, I mean, again, like I said, next year is still full of uncertainty. But if you look at the current situation, there is always a reason to believe that your inflation pressure is off. You can see that it moved, right? Quite, I mean, with a lag of about 3 months, the freight cost and your CPI, right? Whether it's CPI or Malaysian CPI, right? Because we also have to import a lot of things, right? So when this start to come off, right, inflationary pressure will ease off. Because this is one of the factors, right? It doesn't account for all the inflationary factors. You know, the energy and all this, but all these are pointing to you that inflationary pressure, at least for the next few months, provided Ukraine-Russia situation doesn't worsen, then you should see a more weakening inflation trend. Okay. And that is the reason that after the US October inflation figures come out, right, as of yesterday, right, the market expectation is coming December, right, 85% of the market participants are looking at 50 bips, right, not 75 bips, no more. I mean, before that, people was just so worried about 75 bips. That's why equity market is just, falling off. But now, suddenly, people are anticipating about, 85% are looking at 50 bips at this moment. And then for the February Fed, how many more bips will increase at this moment? Slightly more than 50% looking at 50 bips, and then slightly less than 50% is looking at 25 bips. Right? So again, next 2 months, I mean, we have our reasoning I will share with you. That's why we may be wrong. We maintain that probably February, the rate hike will be only 25 bips. Okay? Where's the slide here? Okay. Why we think so? Okay, this is the one. If you break the US inflation, because why we need to talk about US inflation? Because it affects the US interest rate, which in return affect our monetary policy, affect our equity market, affect our ringgit as well. Right? So our view is that this one you can't really see it. Actually, it was flat, right? September, October was flat. What is this? This is what we call, this Fed. They look at it, they split it between sticky and flexible CPI. Flexible CPI are mainly like your energy, your food costs, which are sometimes seasonal. Sticky one is essentially service cost, which is related to the wage, and then also your rental cost. Right? This one is sticky because it won't fluctuate so much. And you look into it, normally, right, the sticky will start to peak out about 9 months after the flexible pickup. So this round, right, it was in March, right? After that, the flexible one is coming off. So if you think that 9 months is a good indicator, it tells it's December. Right? If that being the case, that's why, right? Fed in December, maybe 50 bips. Then after that, if this trend continue, February maybe 35 bips. On top of that, US enter recession as well. That's another issue, right? So this is how we look at it, and that's why I think, that's why there are a lot of arguments, right? The recent run in the US market, Malaysia market really deciphers the US market, whether it's so-called short-term rebound in the bear market or is it a change of the trend? Right? It's still arguable because you need to wait certain statistics to come up. Certain, and actually CPI is a laggard statistic, right? Then I will show you a little bit on what is happening now, right? But let's go back to that. Now, there are a lot of negative news. That's why people get confused a little bit, right? There are a lot of negative news of late. Of course, sometimes market take it as positive, sometimes market become a major reaction, right? You see Google earnings is below expectation because of lower advertising revenue. Similar, you look into this, which one? Twitter's also. Of course, Twitter itself is big trouble. Whether Elon Musk is managing or not, I don't know. Right? But a lot of all this social media and all this are seeing that the advertising revenue is coming up. Right? Of course, there are two factors here. One is definitely the 2 years of a so-called lockdown. Right? The so-called lockdown created a special demand for the social media, and of course, companies, right, corporates will advertise on the virtual world. A physical world, you can't even go. Who can see your billboard? Who can see the advertisement, right? So that's for sure. And then secondly, this is from now onwards, for those people who want to invest in tech and all this, you have to be a bit more careful. Because, I use a little bit extreme. If I say IT iconic, like Elon Musk, like Zuckerberg, they all, are not, Z means Z generations, I'm totally out of questions, but, from our observation, from our information we get, nowadays, this Z generation one is here. They use the social media based on what they want. Like in the past, we used, I still use Google, so I'm already technically is a fossil already. I still use Google, but if you look at Z generation, first is interestingly, they seldom use Google. That means they don't search information through Google. And for us, we just say, just Google it. That's why, over the last few years, I do have a little bit funny, so-called funny perception. Actually, it's a real experience. I would say funny experience. A lot of my colleagues are very young. So a lot of times I say, hey, for this information, for this, you just search Google. You just Google it. A lot of them don't know how to Google properly. Then they'll come back and tell me, cannot find the information. Then when I search it, I say, this is where it is. Right? So after this, all this while, then realize that actually the Z generation seldom Google. And how do they get the most trendy information, most updated information? They use it, on a case-by-case situation. Right? Like for example, for the latest trend, looking for products that's of lower price range, they look at TikTok. TikTok is the source of information. Right? Of course, TikTok has other functions. A lot of funny functions that are not funny, a lot of funny video that stuff and all this, but technically this is how the younger generation, right? For the latest trend, they look for TikTok. That means latest, what is the latest product, what is the latest fashion, all this is all at TikTok, right? For the latest news, they follow Twitters, right, or comments, right? Then, for Instagram, I missed out one more, right? They treat it as digital magazine, and then for gourmet, which shop is nice, whether the food arrangement is a super Instagram type of things and all this, they go to Instagram and people share the same concept with them, right? Then, when they are getting more serious, want to buy certain products, not a low price range, better product, they go to YouTube, right? See how to. So, if you look at the recent tech companies' announcement, right? Google saying that advertising revenue come down. Not really a big surprise, right? Because people doesn't follow you. And Meta is the worst. Meta before that is already a dinosaur. So Meta is even the worst. So, and Amazon also same thing, right? The sales coming down, I will tell you, because people go back to physical. Of course, we don't expect all go back to physical, but of people go back to physical. So these are the things telling you that sometimes you see the corporate announcement and all this, you think the whole world economy is bad and all this. Not necessarily true. Not necessarily true. So these are the things. Right? Okay, in US, we still believe that at this moment, the economy, the spending power is still there. Which actually is a dilemma of fact, because when you have spending power, right, inflation pressure cannot ease off. Right? But actually, this one is really two sides of the coin. Because the key is, where does the spending power come from? Right? So, the most important actually, if you look into it, is because the black has to go back to the workforce. They go back to the workforce, right? You can see from here all the way. During COVID, they are the one that lose most job compared to the whites. Unfortunately, I don't really like to do this kind of comparison, based on race, but this is the reality of the world. Right? Later, when I share with you, not my observation, some of the information on our GE, we still have to be race-based. Right? Unfortunately, although I don't really like it, but this is the reality. If you look into it, it's very clear. Essentially, right? Black is coming back, right? And when black is going back to the workforce, what does that mean? That means that actually, right, they start getting more revolving credit despite interest rate coming up. So when the revolving credit, right, is increasing, what does that mean? They're spending. They are spending. So that's why it still supports the US economy. It still supports the US economy. Okay? So, this one is TV. So that's why I say, it's from virtual to work, right? This is what you see, right? This tells you that the spending, the US consumer consumption is still good, right? This is in target, right? November 3rd to 6th, just last week, right? It said to enjoy holiday theme selection, target will be limiting purchases to 2 units per item per house. So it tells people go to the physical store. That's why online, like Amazon, some will be coming down. Right? But it doesn't mean the US economy is bad. It's just that people go back to the normal store. Right? This is target. Then, food price item. Is it getting more and more expensive? It's not. This is the crate. Right? There are 5 prawns on top, 5 prawns hidden down there. If you want to make a wild guess, how much do you think it costs this meal?
$4 or $5.
No, it's a crate. It's a restaurant.
In
US. No. $4 or $5 you can't even get your McDonald's. Anyone want to make a wild guess? Huh? No. $8 is too cheap now. It's too cheap. I mean, $8 you can get the Chinese buffet food, but not the US. I mean, from our point of view, it's the so-called Western sit-in dining. I mean,
inside is cheese or what?
inside is cheese. Right? There are total 10 prawns, not small prawn. It's relatively big prawn. It's around the size.
That parts.
Plus tips and tax, right? It's about $15.
Wow.
No, $15 for dining is cheap. It's cheap, I would say, right? Beer. Dining.
Yeah, relatively.
Yeah, it's relatively cheap because with 5 prawns, you're not talking about. I mean, imagine in Malaysia how much you have to pay. How much you have to pay?
Food truck one very cheap.
No, you can't compare with dining. I mean, I'm saying dining. Food truck very cheap. You go to the outside store, you look cheaper, right? In Malaysia, I think you don't see a apple to apple comparison. If you look into the L table in a 1U, I think easily $40-50. Right? I mean, for those who have been to the L table before, maybe have you been there? So, what I'm trying to say is it's not absolutely cheap or expensive, but the inflation pressure is not rising up anymore. Right? I mean, because, okay, let me put it another way. US prices can vary with location also. This is in LA. So it's not crazy. I would say it's not crazy compared to a few months ago when the price is going up. When the prices is going up, I can't remember what food was that from 20 to 25, but now it has stabilized. But it's not apple to apple. I can't remember what food was that. It's from 20 to 25. This one it has started to stabilize. So what I'm trying to say, you look at the macro statistic, you look at actual on the ground, it does tell you two things. American consumer still can afford to spend. Secondly, prices have stabilized. These are the two things. Right? These are the two things. Okay? So, were US in recession? I mean, that has always been an argument. I think yes, to a certain extent, because industrial production will not be that strong. And, of course, people will say that negative year is always an indicator. I think it will be in a mild recession first part of next year, especially with some companies start laying off people because they overexpand, they have to lay off, that's for sure. But will US into stagflation? At the current situation, unlikely, right? When we look at the disaster index, right? Every time it rises above 12, this is important, it rises above 12, actually US will go into, most of the time, it will go into stagflation. But this round, I think, very unlikely. Very unlikely.
You just say, everybody's talking about recession. They're really hyping that. But don't you think that's already in the price of the market?
Market already priced in the first quarter recession. The trick is whether it will go into stagflation. Because Europe may go into stagflation. Because this disaster index actually is very simple. It's just made up of two components. Unemployment rate and your CPI. Right? In the past when US into stagflation, actually it is the unemployment rate, right? Is so much higher compared to inflation. That's why it's a matter of stagflation. Right? This round, unemployment rate is low. Right? Even with the recent day off and all this, it's not going to be that high. So recession is a mild one. Yes. I mean, at the current scenario, but stagflation unlikely. So in that sense, exactly, market has priced in. Now market just waiting for the confirmation of how what is the quantum of the rate hike slowing down, and then I think equity market actually was gain more momentum. Okay, Malaysia market at this moment, I think there's some so-called GE hype. Market go up for whatever reason. It's not necessarily local factors. So, okay, like this one, again, like I say, I'm not a political analyst. So I can only base on other people's survey and all this. Not like, of course, other numbers also we get from the, let's say, Fed or whatsoever, and we do our analysis. But I'm not a political analyst, so we just based on the observation of it. Okay, now, the interesting part, this round of the 21.2 million eligible voters, right, 51% are below 40s. That means it's a younger generation. So, it depends on what do they think, right? And then, on top of that, right, of the new voters, 6.9 million, because voting age, right, has come down, right? And like I say, I hate to use it out race-based numbers, but that is the reality, whether in US or in Malaysia, that's the reality. Bear in mind that 6.9 million, of which 60% are Malay. So it really depends on what they think, right? It depends on what they think, right? Now, what I'm going to share with you, some of you may already read it, right? This is the Merdeka Center survey. Statistical survey. So, scientifically, they say it's statistical importance, but you can argue otherwise. But on the statistic side, it is okay, right? But the population is very small. Let me put it this way. But in the statistical science is all right. It's all right. It's only 1,209 respondents. All the statistics I'm going to share with you later is based on 1,209 people feedback. Right? You can argue it's not reflective. But on the other hand, right, the sampling is important. So that's why sampling is across whole country and it's random. Right? It's random and follow about the gender, age, and all this. So, of course, the whole argument is, does this 1,209 people very representative of the remaining people? But statistical science says that it's a yes. So we just look at this number. You will only know after the election result. So the interesting thing you can see is like that, right? Bear in mind that of the 6.9 million new voters, 60% are Malays. So they're still very influential. And interestingly, right, below 30, again, because it's not our survey, so it's very difficult to jam, which subdivide into further subdivide into a more narrow age group to know exactly. But the younger generation, 72%, right, in total say that they will vote, they will go. Okay? And interestingly, you can see that the Malay voters, 75%. 72% is Indian, 38% is Chinese. Chinese may not vote. Okay? Right? Total, of course, across all voters is 60%. Now, the interesting part, right? This is the younger generation. Again, you can see that 75% of Malay will go for votes, and then for the 31 to 50, again, this is somewhat on par. Then for the older one, also somewhat on par. This one sometimes may play the Indian voters. Sometimes they can be the decisive on the outcome. So it seems that they are very keen to go out to vote. I mean, these are the Merdeka survey. I'm just sharing with you. And the survey is until 28th of October. Okay, this is the interesting part. This is the part that you will never know what is the election outcome. Right? I mean, this is a total survey. I didn't divide into, they didn't divide by race or by age or whatever. Those who have a positive surplus, that means those who have more approval than the disapprove. One actually is the current caretaking Prime Minister, right? Muhyiddin, right? This one is top mark. The risk Milan MD, right? I don't know why they put it in, but never mind, just follow it. Anwar, look at it. Right? And the worst is this one. Now, this one is talking about who should be PM, right? Right? And you know our way of choosing PM, right? So, but we have this in mind. This is very interesting, right? Well, technically these three come from the same party, right? These three come from the same party. This one I think is a dark horse. You just don't know. But and the current is like that. I think it's like that. But they come from the same party. How should you vote? I don't know. Same party, right?
So of all of those prime ministers, which,
No. Right, these are the party leaders, except for Tokmak. Right? Anwar is the.
Okay, my question is, which of these do you think is the best for business? The money coming in.
Okay, I tell you another survey. In Ilham, Najib was ranked, I think number 2 or number 3. That was before nomination. If you ask most of the businessmen, they all like Najib. But he didn't even contest, so we put that aside.
But the ones that's left, which of these do you think is the best?
You never know, because you have to see how the government is formed. Right? This is something that, this is something that we need to see. We need to see. I mean, the fact is, even this two was prime minister before, but the period was short. It was in a special COVID situation and all this. You can't really see the actual managing economic policy during the normal time. So it's unfair to say that they don't manage well, so they are not managing well, or they manage very good, so we continue because it's a special situation. And then the rest has never been a prime minister before. Okay. So now this is same as US. Right? The number one concern of the voters is inflation. So how this will affect voters' decision, I have no idea. I mean, this is Merdeka survey, I say, just to show you. Right? Again, I mean, if you look at the US, why at first everybody thinks that I take US as a reference because here, I don't know, I say you stay at 1 week to see how the parties campaigning themselves. But in US, initially, everybody thinks that there will be a red wave. That means Republican will win big. Because their campaign is exactly tackling the right voters' concern, inflation. But unfortunately, because Republican is quite conservative, right? The voters' second concern is abortion. That's why those votes flow into Democrats. This is the result you see in US. So in Malaysia, that's what?
It's cheating.
Which one?
They win because of cheating.
No, this one.
You don't see that.
No. This one is very, very difficult to comment because, put it another way, can we say, putting Malaysia aside first, otherwise I will be in trouble. Can we say in any country election is not cheating? Can we give an example? For what I know, I can. Right? So it's very difficult to say, is there a clean election putting Malaysia aside? Otherwise I'll be in trouble.
Because they cheated. just like how Joe got the watch. Okay.
No, I mean, that's like I say, all these, we don't know. But the fact is, let me put it this way. The fact is, the incumbent will always have the advantage. That's for sure. Because you have the machinery. Right? Whether it's a country election, whether it's like any association, society election, incumbent always have the advantage. Right? I don't mind to tell you my experience. I'm not the one doing it. I'm the one that witnessed it. Right? Example, I can tell you in certain association and all these example, when you come to the election here, right? The incumbent, if you know that who are your opponents, right? Right? I mean, in the past, now the game may be slightly different, but it doesn't mean you cannot do it. In the past, you have to send out, right, the nomination form, right, to your members, right, so they can nominate, right? So if you know that there's a group of people who are going to challenge you, what do? When it's a big association, you know that you don't have to stand it, right? You can just go to the post office and just go through it with stand it. Then after that, you post yourself, right? So you just hold that post for 2-3 days. So the moment that they receive it, it's over. But on the stamp, I send it on time. Right? You can do that. You can do that. That one is on accounting. That one is on accounting. But even before election,
Counting is voting is
not necessarily true. Not necessarily true. But let me put it this way: there are a lot of ways. There are a lot of ways. Even before election, you can play a lot of games. So what I can say is that the incumbent will always have an advantage because there are a lot of things you can play. Right? A lot of things you can play. Right? I mean, whether the word use, the word play, or not, I don't know. But a lot of things you also can't prove that it's illegal or whatsoever. You can argue it's ignorance. I post everything, but I forgot that there's one more back. I forgot to post what you There are a lot of things. So we put all these aside first. Now, back to GE15. The voters' number one concern is inflation, 32%. So how this will translate into which party they are going to vote, no idea. Right? This is what they have survey. 32% think that inflation is not concern. The topmost concern. Right? Political stability, not really, 13. Right? Corruption, 12. Right? Enhancing economic growth, 12. Right? Protect welfare, 6. So, we don't know. Right? Over the next 1 week, how the parties or the candidates can strike the chord, right, of the voters. Right? Just now I'm saying because Republican strike the right chord on the inflation. But because of the abortion policy, a lot of women will support Democrats. Right? In between, whether there's cheating, there's whatever, we don't know. We put that aside. I mean that one up to the country, up to that country voters or whatever, go and figure it out. Because we can say anything we want to say, right? We can argue anything until the cows come home also. There's no conclusion because we don't have proof. I mean, you don't have a solid fact there. I wouldn't say proof the solid fact there. So we put that aside. So this is our Malaysia voters' concern, inflation. So how the parties can make voters resonance with them on how they tackle inflation, I think is one of the interesting factors. But again, mind you, this is based on 1,209 respondents only. Just mind you. And again, within this 1,209 respondents, the interesting observation is that, right, which is quite understandable. 32% of the Malay will go to Barisan, right? Harapan is only 30%, right? So if you look at total, it's a different picture. Then this one, of course, it's very clear. And then the interesting part, you have to look into that, right? People who have no internet access are more inclined towards Barisan. Right? People with internet access, right, inclined to harapan. So those who are still, swing vote are still uncertain one, right? If they have this number, right? So how you can swing these people? Then the interesting part also, the youngster, right, is quite fairly split up, right? It's quite fairly split up, right? But for the age between 31 and 40, it's more inclined towards this one, right? It's more inclined. For the older one, inclined here. So how all this survey will give her a picture on the actual outcome, frankly speaking, no idea. No idea. But this is a reference, So as far as the survey, you don't see a clear direction, the likely outcome. I mean, it's not like a very lopsided situation. So, of the swing voters, those who are undecided and all this, just to summarize again, 18% are 30 years old and below, 34% is between 31 and 40 years old, 62% are rural voters. This is the important part, right? So, like I say, over the next 1 week, see how, right? And 91% are without internet access. So it depends on your campaigning machinery, really, 50% are Malay, 36% Chinese.
Well, one thing, interesting, okay, as you notice, the KLSC has done very well in the last month or so. It's come up from less than 1,400 now, is moved up quite a bit.
Yes.
So what do you think that has reflected based on what you're saying?
No, I mean, in Malaysia, when there's an election, right, there's always a hype that market will go up. So some people will go in.
Okay, fair enough.
I mean, it's irrelevant of all this Merdeka Center survey. This Merdeka Center survey, right? Of course, like I say, we never know how the voters, but what I'm going to say is that the election outcome can affect our CI direction in the future, which I will share with you. So this is what it is. This is a wild guess. Okay, this one is the number of seats contested for parliaments. Right? Barisan contested 178 seats, Harapan contested 206 seats, right? Perikatan 149, Berjuang 116. So, like I said, the outcome is anybody guess at this moment. But for CI, for market, right? If Barisan win, I think market will go up. But probability, I put it only 36% at this moment. That Barisan will win. Right? If Harapan win, I think market will come up. At least for a while. Until you can see that policy. Right? It will come down. Right? 31% chance they win. Hung parliament. Which means that no party can form or no alliance. That means even Barisan cannot form a government by themselves. Harapan cannot form a government by themselves. Berjuang cannot form a government by themselves. Right? Perikatan Nasional cannot form a government by themselves. That means you have different permutation between Barisan and Perikatan, or Barisan and Berjuang, and even Barisan and Harapan, and so on and so forth. Right? So, hung parliament, I think 33% likelihood at this moment, market also will go. But never know, because it's only 1,209 respondents only. I have to stress that part first. So in reality, don't know. We have to wait for the next 1 week. But the moment the result come out, you roughly know which of this scenario will happen and how likely the market will be. That's all I can say. I have no idea of who will win, frankly speaking.
Well, what I'm saying is, because the market has done quite well of late, perhaps it's anticipating that the BN will win.
I'm not sure. Let me share with you this one. Maybe I examine it a little bit first on the election. Okay. This is what happened, right? I mean, for the last 4 general elections, this is how the market behaved. 6 months until the election day, market go up 31.5%, right? I mean, you don't really see a clear trend, frankly speaking, right? But if you take the average, this is where it will be. I mean, our market is here, right? It will go up to here, right? I mean, you can see that towards later part, it will always go up, right? It will always go up. That's all you can say, right? It's just some hype on the. I mean, Malaysian investors always think that if there's election, that you have this UMNO related stocks, you have that related stocks, so they will have to push up the stocks and all this, so this. Huh? So it's not necessary that they know who will win. Right? It's just all this type of expectation. Huh? Okay, so back to Malaysia, how is our economy at this moment? If you look at our industrial production index, right? The one that is supporting us is technically manufacturing, needless to say. And then if you look at the export, also export is not as strong at this moment. The only one that actually, I mean, to all countries, to every major economy, except for Japan, right? It picked up a little bit, but because that is more towards the natural gas side, so it's more under petroleum category, right? So you look at our E&E, it does go up, but it's not to say super strong, but it does support our economy. Then, opening of the economy, tourism. Tourism is not that, we are still, for the second quarter, the immediate opening up, we have about 2 million tourist arrival. Last quarter, it come off again, but last quarter is not really a holiday season, so right? So it come off. So, but then, having said that, it's still much below our pre-COVID level, and it's unlikely to come back to there until China allow the people to go out of the country, right? At this moment, I think we are going to miss the Chinese New Year China tourists. So it's not going to be as strong, but of course it's better. So it's an improvement to the economy. So consumer sentiment is still alright. I would say alright, it's still below 100, but it's improving. Okay. Then, if you look at the retail business, the consumer spending, right, it has been going up, right, after all the 1 year cannot spend money, so you have some pent-up demand here. Mainly, where do they spend? Essentially, it's still on retail and wholesale. Go to the wholesale market. And then motor vehicles is a little bit volatile, but you know that certain makes you wait for. Of course, there is a supply chain issue for a few months, a year. So these are the things. And where do they go? Essentially, you can see that actually most of the retail outlets and then a lot of money is spent from petrol. Right? So, people movement has already back to the pre-COVID level already. You can see that especially, be it retails or be it into the grocery retails, it's retail and recreation. So it's back to normal. And you look into it, right? But then this is across the whole country. But if you look at a certain important states, like KL, KL is an FD, it's already state, right? Grocery spending has back to normal, but recreation is still quite weak. Retail's recreation. Selangor, same thing, right? I mean the normal day-to-day spending is back, but on the recreation, actually tourists don't really come in, so to speak, right? Then Penang, yes, a little bit more. People, yes, you see some tourists having groceries, okay, right? Johor, not. Retail is still okay, but again, recreation, grocery is still okay, retail and recreation is still weak. So, it's not a full recovery, but it's gradually coming back. It's gradually coming back. And then, okay, the issue is that to a certain extent, if you look from a macro picture, of course, people have been, some people have been saying that the recent Bank Negara rate hike and all this making its life more difficult because of the housing loan commitment and all this and so on and so forth. But if you look at the more macro picture perspective, Malaysians are not that poor, right? Although, right, media will focus on the household debt to GDP, which is 4.5%. Very high. Very high. Right? But then, if you look into our liquid financial asset to debt on the household one, right, it's 137%. So what does that mean? That means that people still cash rich. But the fact is that this is macro one. Beyond is the extreme. The rich one is the rich one. Right? The poor one is still suffering. So that's why it's really uneven. But you talk into, well, Malaysia as a whole go into trouble? Not necessarily, because you stay at the rich people. Right? One sitting at the back end. Right? And the impairments at this moment spike up a little bit, right, to 1.2%, but it's still, relatively okay level. So in that sense, I think consumer spending will be still relatively alright. Right? So GDP, I think go through this. And then if you look in the business segment, right, from a macro perspective also, right, essentially the operating margin is still okay, right? I mean, coming back during the COVID level, right, even is better than pre-COVID as well, right? So the operating margin is okay. Interest coverage is still alright, right? It's still alright. Impairments go up a little bit, but it's not, say, ridiculously alarming. So everything. So in terms of government, again, right, our government debt, because bearing in mind that most of it are local, and bear in mind that, right, the liquid asset is still a lot, right? So government still can borrow money, so still can borrow money. Now, then what does that mean to our capital market? First is that, of course, because the US interest rate ringgit has weakened, so you see some foreign fund outflow. That's why our foreign reserves are depleted, right? Depleted, coming off, but it's still quite okay. And we run an analysis on the relationship between US dollar and ringgit, right? And between the Malaysia and US interest spread. So to put it this way, we don't think that ringgit will touch 5, right, to a US dollar. Because for that, the US, right, terminal rate has to go to 5.45, and with Bank Negara not raising any rate from now onwards. So it's very unlikely scenario. So what it means is that with the current expectation that US rate hike will start to slow down, right? It doesn't come in down, but it's slow down. The quantum slow down, right? The differential is not going to increase so much. That's why we think that to a certain extent, ringgit has hit the weakest point already. That means, that yesterday it rebounded a little bit, right, at 4.62 something, depends on which quotation you're looking at, right? So we think that from now on, ringgit probably will go back to around 4.5 level. Like not tomorrow, next week, but over by towards the end of the year, it will start to go back to the normal level. And will Malaysia be like Sri Lanka? My answer is no at this moment. Because if you look at the macro economic indicator, like just now the foreign reserve, to the import and then short-term debt to our export, right? Foreign reserve to our short-term debt, and then our money supply, and also our real short-term rate, and also our fiscal and current account as a percent of GDP. When you look at all these, we are not a distinction student. We are not a top student, but you look into it, we pass. We are not a super performer, we pass compared to Sri Lanka. Because all this rate one, when you have more than 4 to 5 rates, that's where you start getting into trouble. So Malaysia at this moment, still alright. Okay. So unlikely we go to stagflation. This is how we look into it. At this moment, we will follow the government forecast first, because we have yet to see the policy to come out. And then in terms of ringgit, right? Year end, this one we will have to revise already, because I say we think that it's hit the bottom. Next year, we are looking at around, this year also more or less by year end, it should be around the same level. It should be around the same level. Our year is still implying that probably they expect one more rate hike from Bank of Ghana. So what does all this mean to the market? First is that market will become less and less speculative globally, right? The major reason is that the QT. Because people now focus so much on their interest rate, right? They've forgotten that actually Federal Reserve also is reducing the balance sheet, right? Reducing the liquidity. So you can see that when liquidity coming down, right? Of course, excess liquidity being reduced, market will come off a little bit, right? Including the commodities. But put it another way, during this part, right? These are actually, you can say, it's hot money, short-term speculative, right? They're driving up. Besides, of course, economic factor also give a boost to it, but part of it can be due to the excess liquidity. So this one will be drying up a little bit, and so does the margin trade. You can see that it really moves tandem with this is the US one, the S&P and the margin is been coming off, so this will come off. So, which means that lesser liquidity. Less speculative, that means market from now onwards may not be as volatile as what it was over the last 6 to 9 months. 6 to 9 months.
Excuse me, but does that mean that we should be focusing more on value stocks rather than growth?
Focus on valuation. Valuation. At this moment, even growth stocks, right? It depends on interest rate. It can make it cheap. So it's more of a valuation situation, right? So, will the world into a financial stress? Cryptocurrency now will go haywire, right? But that one, I don't think it's going to so-called have create a crisis financially globally. Because if you look at the financial stress, right, of countries, right, be it US, advanced economy of emerging countries, right, all are still quite okay, right? All are still quite okay. The stress level is not that high, right, compared to the past. Okay, so it's still all right. And of course, our market, like I say, first now we have the election factor, and then of course we also can't run away from the US general market sentiment as well, right? We can see that we are more or less this round, right? We also move in tandem with the US market to a certain extent. It's just the quantum is different. Okay, so this one I don't think I need to go through with it. But the fact is volatility of the market, I say, because liquidity has been gradually been mopped up. So you look at the VIX index, this equity volatility, and then you look at the MOVE index, which is the bond liquidity. Both have come off, but although it's still above the historical average level, it's still a bit high because there's still some uncertainty looking forward. That's why, but it has definitely coming off. Now, in terms of back to the valuation issue, right? If you look at the earnings, I didn't put in the PE because if you look at PE alone, you may think that it's cheap or it's expensive. So it's more important to look at the earnings. When you look at the earnings, there is some downward revision, but it's not massive, right? For the S&P 500, even after the third quarter result is out. So it's just, right? Nasdaq is still a bit sharp here, but here is more or less within the market anticipation. That's why I think more or less the market has hit the bottom, right? So now for Malaysia, right? Foreign funds, has come in a little bit for the election play and all this, but it's not in a very big way. It's not in a very big way. You can see this, the foreign fund, right? It come in August, in the anticipation of actually more towards the so-called budget expectation. Then the budget suddenly, becomes a non-event. Now it's on the election side. Okay, so this one, skip it. Back to election. right? There's some upside here. Originally, we think that it's 1571, but this may not be able to achieve, but it can go to around, if you look into here, right, it can go to around probably 1520, 1530 is possible. Now, for CI, our year-end target, right, this year we look at 1541. Next year, assuming that the world doesn't move into a big recession, right, we are looking at 1695 as a base case scenario, 40% probability. Worst case, which, I mean, again, you probably be more worried of economy slowdown and downturn. So we put equal probability, it's a 1400. Best case, I think it's not that likely. Of course, we hope for that, which is 17.6, but that's likely. I think it's more likely around 1695 to about 17 plus a little bit. Okay. This one I think I can skip it already. In terms of sector, construction, I think it's after election, right? I think it's after election. Oil and gas, we are positive because technically, ESG now is being reviewed and to be a bit more friendly to invest in the oil and gas company, like together with what Pierre has mentioned on the Republican. So this one is quite okay. Now, on the risk side, right, from now to next year, of course, global recession, right, abnormal weather, China zero COVID strategy, right, whether it will continue after March next year. Geopolitical risk as usual, but I don't think China will forcefully, we use the word forcefully, unify Taiwan through military force. Not that likely, at least not before 2024 presidential election in Taiwan. Domestic political uncertainty depends on this one. Depends on. Then we just have 1 week to see, right? And sovereign downgrade on Malaysia is not that likely. The only one big risk that nobody knows next year is the so-called solar flare. That's why I put this a black swan event. NASA predicted that next year is the peak of the solar flare. What does that mean? When solar flare is strong, it creates a very strong electromagnetic wave that can affect Earth, which means that it can affect our grid, it can affect your internet, which is going to be a nightmare for the modern world, create chaotic situation. So the only thing is we can just monitor and hope that it won't happen. Okay, so I think that's all for me. Any questions?
Okay, I got one question from online. So the foreign currencies, USD, SGD are offering high foreign currency FD account maintained in Malaysian banks, interest rate around 5% per annum. Do you think it's a good move to convert ringgit now and save in foreign currency FD, example USD and SGD? Okay,
let me put it this way. You always have to, it depends on the view. It depends on the view. Let me put it this way. Our view is that next year, right, ringgit will strengthen back to 4.52. Now we're at 4.6. So you have to calculate. You gain on the interest rate, you may lose on the forex. So this is the thing that you have to look at. But of course, if you are someone that you have your outflow expenses in USD or SGD, then no harm, right? But always bear this in mind, right? It depends on your view of whether ringgit will continue to weaken. And at this moment, I say, if it's hung parliament, ringgit can weaken. Right? Just now I said ringgit more or less hit the bottom because it's from the interest rate perspective, from the bank graph, US rate, right? Spread, but if we really so unlucky ended up in the Hung Parliament, ringgit can be for a while until the dust settled. Okay, any other questions?
Okay, so next question. In case there is a hung parliament happens, let's say new government still unable to form by 21st of November, will 21st November declare as an emergency holiday? How will the local stock market respond and what will be the worst case scenario?
Okay, I mean, Hung Parliament market will come down, that's for sure. This is what I can say, right? Market will come down. If we cannot form government immediately after the election, technically, we are quite different from US. I mean, we cannot form the government, but the administrative side will continue. So you don't see like US, the government closed down, so-called like the
That's it.
yeah. I mean, when they cannot get agreed, no budget for the civil servant, so civil servant will just rest at home, right? You want to renew your passport, cannot renew. You want to go to, let's say, actually we seldom go to government counters. Let's say whatever land office or whatever, they just not working out. But Malaysia unlikely. It's just that, I mean, business will still go on as usual. I mean, they still get their salary, and there's nothing to worry. The only thing is probably they don't get the agreement that was promised in the budget on the 8th of, on the 7th of October. But market definitely will come down. But don't ask me how far it will come down because this will be an uncharted territory for Malaysia. It can be bad.
But as far as handling our clients' ETF money, okay, these are possible scenarios. But to protect ourselves, don't you think if we focus on companies like good consumer companies that have a cash flow, low debts, that consistently make earnings, those will be fine. That'll protect us.
I mean, definitely first is that you must look at the companies that have a strong balance sheet. That's for sure. Then earnings, okay. In this scenario, right, life still have to go on. You still have to shop, you still have to eat, right? And then for exporters, certain things they still need to export. Like I say, unlikely our customer shut down, so to speak. So you still can export. So all this, will be less affected by our political uncertainty should it happen. Then within that, go into the strong balance sheet company.
That's the bottom line.
Yeah.
Okay, so the next question, will Malaysia be in recession next year? Do any economic indicators point that?
At this moment, no. At this moment, no. But all depends on the election outcome. Like which scenario it goes to. Like I say, within Malaysia, it doesn't seem so. But then, if there is somewhere, right, a financial crisis, right, somewhere, then we may be affected. But for me, at this moment also, I don't think there is a financial crisis. Because I don't think cryptocurrency will create a financial crisis.
Okay, the next question, can you elaborate more on the solar flare black swan event?
Okay, solar flare, I mean, the sun activities has a cycle of about 24 years. So next year seems to be the peak of this 24-year cycle, right? Solar flare. Solar flare means there's more explosion, so to speak. It's more explosion within the sun. I mean, the sun is hydrogen, technically it's hydrogen gas, and it just keep burning and explode. So when there's more explosion on the solar flare, more explosion, then it creates a solar flare. That means it just spike out. Just like when you boil something, it just spike out. And then because of these activities, it creates a very strong so-called electromagnetic wind that will travel all the way through the solar system. So the Earth cannot be spared from that. Right? So let's say if this strong electromagnetic wind coming to the Earth, right, it can affect your power grid. Right? Because electricity is electromagnetic. So it can mess up our grid. And of course, in the modern world, your internet in the extreme, it's unlikely to happen into that extreme. In the extreme, the electromagnetic powers can even cause your electronic equipment becomes faulty, right? And a lot of animals, birds, fish, and all these will be directionless. Then you see, out suddenly you see the wheels that is stranded in a pork clank, stranded in pork, because animals, they have a so-called magnetic sensor for them to know the direction. That's why the bird can fly, without losing their way. Human without waves, you lose the way. If electromagnetic wave happen, the waves doesn't work, you're also in trouble. So these are the things. So that's why you can create a lot of problems. Then after that, solar flare, which I didn't put it in because that will be probably 2 years down the road after solar flare. Then you have the so-called sunspot. Sunspot will affect the weather of the Earth. Again, it depends on how many sunspots, how strong the sunspot activity is.
So the next question will be, will Japan raise interest rate to shoulder weakening yen?
Let me put it this way. So long as the current governor, Kuroda, which will be retired in April, right? Until then, the answer is no. 100% no, I can even say. Okay? Then, by the time he retired, again, it depends on the situation in the US then, right? If the US already start to slow down the pace of the interest rate hike, Japan may not raise interest rate at all. And especially if US also into a mild recession. That will affect Japan as well.
So the next question, what is your view on the budget 2022 drafted but not passed? Is it business/investor friendly?
There's nothing to view because it's void already. Right? And then it depends on who is the government. Right? Of course, Perikatan will say that they will use back the budget. Right? They will use back the budget, but then you never know. So no need to bother about we all wasted one whole night to write comment on budget, that on Monday is already useless already. So no need to worry about that.
Okay, so next question is, what's your outlook view on Bitcoin?
Okay. Okay. The recent drop, if you look at the whole trend, it's not to say that bad. You look at you see, Bitcoin, essentially, this Bitcoin are not other cryptocurrency. This is Bitcoin, because I think you all know they have the so-called halving, right? After every halving, right? The number of Bitcoins generated will be much less, right? So because of that, every time at the halving, right, it will spike up. The price will spike up. The price will spike up. Then after that, it will come back to more normal level, right? The most recent halving is in 2020, May 2020. So after that, it come down, and we have some factor of that. So from now until 2024 March, the fourth halving, I think it will just hovering at the company, provided that there's no cryptocurrency crisis. Right? I mean, this is different for Luna. Since I mentioned this Luna.
Okay. Next question. Do you think technology sector is near or already bottom, or it will face fate like glove sector due to potential oversupply issue following more and more new plants being added from 2024 moving forward?
Actually, we are positive on tech sector, but not indiscriminately. The thing is, if you look at tech sector, first is that those who relies a lot on the handphone one, right? I mean, will see an adjustment because the demand is bigger, okay? But those who are on more exposure on the auto industry one, even 3 days ago, when Toyota announced their quarterly earnings, they commented that technically they still see some tight supply, right? On the chips, especially more towards the power related one, even until at least first half of next year. So it depends on which sector you are in, right? I mean, the tech sector, like I say, for those platform and all this, is because the younger generation, they know how to use it for different objectives. So it would be across the board. The advertising revenue, right, which usually across the board will be reduced, and also people are back to some physical activities, so there will be some money going to the physical side, right? Then, like on the e-commerce, I mean, for our part of the world, e-commerce will still be growing. You know, US, yes, it will come off a little bit, and China, because the vice governor was arrested, and this year that's why the double 11, 1111, is very low profile. So we only know after that how strong the China consumer spending is because of the Xi Jinping, you know, cracking down on all this, so they are very low profile. So in short, companies that have higher exposure to the auto-related semiconductor is still doing all right. It's still positive, right? The companies who have a much higher exposure on the smartphone side will see adjustment at least until first half of next year.
Then from the same person asking about the solar flare earlier, she asked where to follow reliable solar flare news.
NASA website.
Okay, the next question. What's on the Malaysian property market for 2023? What do you foresee?
Okay. There are few issues on Malaysian property market. One is that labor shortage. So you have no workers to build. That's one. So even you want to launch, people will think twice, right? I mean, demand side is there. People still want to buy house, that's for sure. But supply side will have some problem. That's one, right? That's why I think for condo, in KL area, they extended. I mean, Malaysian property in Malaysia is, let's say you have a project, you get approval from the government, then you have to build it within 2 years. This one for condo in KL area, they are allowed to extend, if I remember it correctly, for another 1 year. Which means that because you can't launch it, you can't promise when you can complete the project. So, to put it, demand is there, but because the supply, you have a labor shortage, you have to wait until election over, the new government, how they're going to resolve this issue, right? That's one. Then, another one is, of course, interest rate is an issue, right? People has been borrowing at a low interest rate, now with a higher interest rate. So, depends on what price the property is going to launch. Right? So I think I expect that the prices won't be that strong after factoring in the inflation of the raw material cost or even labor cost.
With the weakening ringgit, would it benefit the glove exporters, the glove manufacturers to export?
Well, because the price is being reviewed with following the currency. So it doesn't. So in fact, although like I say, we expect the ringgit to strengthen back, a little bit now, 4.5. It's not going back to the 4 or 3.8 level. But you have to bear in mind that when there is a change in direction of the currency, a lot of companies don't see that reflected into the bottom line. Because don't forget, your inventory may already bought at a higher price or lower price. So when the currency goes the other direction, you will just get knocked off of it. Right? The only one that normally will benefit a bit more on the currency are the consumer staples. Right? I mean like supermarket and all this, because the turnover is faster. Right?
So what do you think? Company specific question.
Depends on the company.
Asia.
Air Asia, depends on the question it is.
So this question is, what's your view on Air Asia KN17 and the future prospects?
Let me put it this way. Air traveling, of course, after COVID, we have the pent-up demand, that's for sure. Right? This is a good period. But then after that, the growth rate won't be what people extrapolated before COVID. For the reason is, corporates start to realize that I don't have to send you to Hong Kong, Singapore, even domestic to Sabah, Sarawak for meeting, right? So part of the demand will be reduced. So exactly, it depends on how they structure themselves. That's why Air Asia trying to do a lot of things.
And another one will be on Alibaba. What's your view on Alibaba? Can continue to hold the stock or unit trust fund with its holding?
Now, I mean, okay, for unit trust fund first, a unit trust fund at Alibaba, no matter how, a unit trust fund cannot have more than 10% exposure. So it's not going to, bring the whole unit trust fund performance down the drain. Now, as a company itself, like say, you have to wait until first quarter of next year is over when CGP come out with a better policy moving forwards.
Yeah, that's about all your questions.
Okay, then, thank you very much. Thank you.